Welcome to the Liberty Road with me, Andrew Moran. At its first policy meeting of the year, the Federal Reserve has left interest rates unchanged. As widely expected, the central bank kept the benchmark federal funds rate in the range of 3.5 to 3.75%. This was the first time the central bank had not made a move to the policy rate since the summer. Moreover, the Fed voted 10-2 to cut interest rates. The lone dissenters were Trump appointees, Fed Governor Stephen Miron and Christopher Waller. They opposed keeping rates steady and instead supported lowering interest rates by another quarter point. Both have been vocal about the need to bring down interest rates. Waller wants to support the labor market and prevent further deterioration of employment conditions. Miron says he wants to prevent any loss of momentum in the broader economy and thinks housing is the only component that is contributing to elevated inflation. What does the Federal Open Market Committee say? Available indicators suggest that economic activity has been expanding at a solid pace. Job gains have remained low, and the unemployment rate has shown signs of stabilization. Inflation remains somewhat elevated. In fact, investors are not expecting any action from the rate-setting Federal Open Market Committee until their spring or summer. Futures market data indicate that while traders are pricing in 2 to 3 rate reductions this year, the first cut of 2026 may not happen until the June meeting. And this is an interesting time. Why? Fed Chair Jerome Powell's term expires in May, although he will still have a seat on the Board of Governors for a couple of more years. Speaking of the top spot at the U.S. Central Bank, in a stunning turn of events, prediction markets now favor BlackRock executive Rick Rieder as Trump's nominee to lead the Federal Reserve System. While former Fed Governor Kevin Warsh had been the overwhelming favorite, traders on Polymarket and Kalshi think President Donald Trump will tap a respected Wall Street veteran, similar to Scott Bessent, who was selected as Treasury Secretary. Does this mean the Federal Reserve will be invaded by doves in the back half of 2026? Not necessarily. Remember, there are 12 voting members, so Powell's successor will need to convince at least half of the FOMC to bring rates down to below 3%. Or if the new Fed head wishes to please the president, then rates would need to fall to 1%. Whatever the case, the Fed is in rate cutting mode, or is it? In the third quarter of 2027, JP Morgan Chase strategists think that Eccles Building will hike rates by 25 basis points, bringing the policy rate back up to 4%. If this happens, Trump will not be happy with the new Fed chairman. But in the end, Powell told reporters at his post-meeting press conference that the Fed can start loosening policy constraints once the effects of tariffs on prices begin to ease. Stay tuned for March. Thanks for listening. You're on the Liberty Road, a production of LibertyNation.com.